Happy Tuesday, Maverick Traders. This is Rob Reinhold. This is the Market Roundup, December 9th. Let's jump into it. In this session, we're going to be talking about the news of the day. We're going to go through some of the markets. And again, we see lots of movement within sectors. And then I've got some bullish setups for you and a sideways setup for you in this session.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
All right, let's break down the market and let's talk about some of the news of today. Now look, there isn't a ton of news because we are right in front of a Fed meeting. Tomorrow is the FOMC meeting. We've got the statement that comes out at 2 p.m. Eastern time, the press conference at 2:30. Typically, you see pretty much flat movement going into Fed meetings. Not anyone wants to take a big position. It makes some sense here. The markets are just hovering right near all-time highs. The S&P is like 1% away. The Qs are still kind of far away, but the RSP is right there. And we actually got a new all-time high on the Russell today. At the end of the day, the markets was sold off just a bit at the end. So Dow was negative, S&P basically flat, Qs flat, Russell up a little bit. Bitcoin had a spike out of nowhere, ended up close to 4% at one point. Gold was strong most of the day, really didn't go anywhere. And if we take a look at our internals, you can see a slightly bullish lean on how many were up versus how many were down. But our 50 MA pretty much right at 50-50. Half of the stocks are above, half of the stocks are below. So it's showing us that even though we are at really close points of all-time highs, there's not a lot trading above this 50-day moving average, which tells us, which we already know, that it's a narrow market, meaning the big cap tech stocks have been leading the charge most of the way. So here we are. We had this massive rally on Thanksgiving week, and then you can see we've basically based. But we've based more in an upward lean, showing that there is some bullishness out there. The last two candles have simply been pullbacks, long upper shadow. We had a red candle here, but with some buying today saying, okay, well, the buyers aren't ready to come back in yet. At this point, we've got a high base. That's just all it is. The bottom of the base, let's call it 6,800. The top of the base, let's call it 6,880. And that's just where we are. One of those points gets broken, then all of a sudden we have some movement. But until then, just looking to high base in this area. We come over to the RSP, the equally weighted S&P. You can see that it's not quite as close to its all-time highs, but it's looking just fine here. Had a massive rally, and you can see we've had some candles get back a little bit of gains, but there's nothing in here telling us to be bearish, but there's also nothing in this to tell us that this is a raging bull market. Look at these moving averages. We've basically been going nowhere for about the last 2 to 3 months. So I'm going to keep saying what I've been saying the last couple of weeks. It's a bullish market, but it's not a bull market. So bullish meaning that people are buying pullbacks and generally prices are going higher. But we do not have a trend in place at this moment. And the heat map is really showing us what we already know, that the big cap tech and software and consumer cyclical, this is what's been lifting the market, and we're pretty mixed throughout the rest of the market. The market's at a +2. We're at a +2. That's just where we are. We're high basing at all-time highs. We've got the Fed meeting tomorrow. Likely see some move, probably to the upside. That's what high bases say, that most of the time it breaks out. But of course, we have no idea what this market's going to do. We can just say, what are the odds? What are the best places to be? And right now, everything is telling you technically that the long side is better than the short side. So when we talk about trades, I've got more longs than shorts. I'm going to start off with one that I call a runner. A runner means, hey, this one potentially could be a big winner. Now, of course, it also means it could be a big loser because it's volatility. We're just talking about volatility. This was a $30 stock last summer. It's now a $70 stock. This is JFrog. I've never traded it before. This is the first time it's come across my radar on my screeners, but I like it quite a bit. We had a big jump from an earnings report. We based for about a month and a half, and you can see clear breakout today. This has $2.50 strikes, so I like the 67.50, 70. There's only monthlies on this, so you're going to have to go out to December 19th, which is only 9 days away. I don't want to be too aggressive for 9 days. Like, I don't want to go up to 75 or even 80 in the December period. I would want to go out to January if I wanted to get that aggressive. For me, 67.50, 70, give me my 40% return on that spread all day long, and that is it. So this one is looking like it could take off. You definitely can be more aggressive on this, and this is, again, as I said, a runner. This potentially could have a big move, but we'll just have to wait and see what happens. On the other side, looking down the risk curve here, and I hope everyone understands and has heard me before, is that you get to decide where you play on the risk curve. Now, a lot of people, they're out there playing the Teslas, they're out there playing the metals company, TMC, and all the stuff that's really running. And you can play that game, but that game also has a lot of risks. And when the markets do turn around, or when we do get some news, these things get slaughtered. If you don't want to play that game, you don't have to. You can go down the risk curve. So I just gave you one that, hey, this is a pretty exciting name, could have a big move and likely to have a lot of volatility. You say, that's not my cup of tea, Rob. Great. Here is Albemarle. All right, this is in the materials sector. Now, the materials sector isn't doing great. It's not in the top 3 sectors, but this is definitely outperforming here. And I like this quite a bit. It's sitting right at 130. I like doing like a 125, 130 bull call spread. It's going to be almost all theta. It's basically saying I think it's going to stay in this range or break higher. If you do want to be more bullish, then I think a 130, 135 spread makes a lot of sense here. So 130, 135, somewhere around there. And just give it some time. This thing's going to have some weeklies. So it definitely looks like it wants to break to the upside, doing this nice ascending triangle pattern. And for a sideways stock, here is WMB. Now, this is a pipeline company. And you can see ultimately we are trading in this range here from, let's call it 56.5 all the way up to 65. As you can see, it drifts up to the top, to the bottom. Right in the middle is, again, the 60 to 62 area. Here's the problem. We need to pick strikes here for a butterfly or for a condor. We have to either be bullish or bearish. Where are we going to be on this? There are dollar strikes. So the question is, do we want to do 61? Do we want to do 60? Do we want to do 62 and be slightly bullish? I like 61. I'm going to do a 58, 61, 64, and I'm going to do this out to December, which tells me my profit window is really right in here from about the high 59s up to the high 62s. I think that's where the profit's going to be in a butterfly here, just 8 days out. Let's talk about tomorrow. I want to reiterate, I've been saying this, I'm going to keep saying this till it changes. We are bullish. We are seeing bullish price action. Most of the days are up days. Most of the pullbacks are being bought. Those are bullish activities. But what we don't have is we don't have higher highs. We don't have upward sloping moving averages. There's a lot of things we don't have that say this is a bull market. It's just a bullish market. So I'm not looking to stick my neck out for January, February, March until I get some more confirmation. But for right now, everything seems to point to the next move is going to be to the upside where that bull market will start again. Tomorrow, we do have the FOMC statement at 2 p.m. Eastern Time. I actually think the press conference is more important. We are almost guaranteed to get a rate cut, a 25 basis point rate cut. That's in the bag. The question is there anything after this? I think the market is going to be a little disappointed if you get what's called a hawkish cut, meaning, hey, we're going to cut rates, but that's all you're getting anytime soon. I think that's what we're going to get. I can see there being a little disappointment on that. That being said, you probably buy that disappointment. Again, this is a bullish market. You buy those pullbacks, and again, the pullbacks are people are freaking out. It's very difficult to be the hero in there that goes in and buys those, but that has been where the money has been made in this market. Until that changes, I'm going to keep doing it. And we do have some decent slate of earnings out there after the bell: Oracle, Adobe. So in the tech sector, we're going to see some movements as well after the bell. That is the Market Roundup. Thanks for joining me. Goodbye.